Welcome back to the channel. Today we're looking at the critical levels for support for Bitcoin to hold and what may happen next over the next 24 hours in case this market does break down. Now the key warning caution here is that I am sure we will see very high levels of emotion, but the key thing that a lot of people won't be watching is the price. They get swept up on emotion, and we know that happens and will continue to happen indefinitely in history because of how markets are made up. So let's look at those price levels and what to expect in case that emotion does get extremely high. And then also look at these altcoins which are on their last chance to bottom. They're getting very close to some other support levels. So let's look at that. After you've hit that like, subscribe to the channel, bell notification icon, smashing all those buttons up to a new all-time high. Thanks for your support. I know some of you aren't enjoying the clicky titles as much, but you are enjoying the content, and that's the part that matters most. It's what's on the inside that counts. Let's look at Bitcoin, 4-hour chart, double bottom forming here. The move to the upside is at the moment very, very weak. You can see this move here, and we've had the correction back down. So looking at the price ranges using our trusty old tool here, that's the 100% range that the market needed to overcome on the next up move. And you can see we only did 78.6% of this move. The reason is we need the market to overbalance to the upside to show that the momentum from the buyers is coming back in. So this is the technical stuff about form reading on a market. I'm measuring this range and then projecting it off the current low to let the trader, let us know what is happening next. What is the smart money doing? We don't need to hear about the news. We don't need to hear about all that stuff, because the people who are actually buying and selling are the ones who are pushing the price up or down. We need to know what they're doing. And so that's why I'm looking at this. So far, the move to the upside has been less than what we saw previously. This is looking at a 4-hour chart. That previous move up was bigger than what we currently saw. So it means that the buyer, for now, short term, the buying is running out. It's as simple as that. Let me know in the comments if that is making sense and you want to hear more about that sort of tape reading to give you a better idea of what's going on in the market before you hear it in the news, similar to what we saw in the news today with the SEC rejecting Grayscale's spot Bitcoin ETF application. This is the thing that we're all waiting for in 2021 to, pump Bitcoin to 100K, 250K, whatever ridiculous number someone was pulling out of their ass at that time. This is the sort of thing that everyone was waiting for. It didn't happen. They've rejected it again. And now what I saw recently is Grayscale will look to sue the SEC. So we'll see how that goes on, how that plays out over, who knows, the next months. It could take longer. If you're looking for another exchange to add to your arsenal to spread that risk out, link to Bybit is in the top of the video description, up to $4,450 of sign-up bonuses when you use that exclusive link. All right, so the targets, the emotional side here, support is at about 19,700. Now, if we break that support, my next level is at 18,900. Of course, 19K is that round number, but just looking at where the market previously was, back before we got to that little dip where we got really, really emotional. It was actually a shorter dip than the previous one, but the emotion was just as high. That's why I'm focused really, really heavily on the emotion, the sentiment, those sort of things that the market picks up. And the buyers actually stepped in sooner than they did to the previous downside. And then we had this small bounce. So the breakdown, I'm looking towards around that 18,900, about 19K. To me, that doesn't look too great because there's really not much left underneath it, 18.2, and then of course that final low at 17.5. But for me, this is probably one of the last legs that I would love to see the market hold up and then bounce from. That's the bearish case scenario to the downside. The upside, we hold up from here, hold this level at 19.8. Of course, let's see the market move up, take out some of those highs. Now, I know that's pretty straightforward, up, down, or sideways. I get it, but we're looking at short-term timeframes here. We need to be open to both ways of the market. So if this is the low that holds, now let's look to the bullish case. What happens to the bullish side? 50% level, if this is the low, 19,800, the 50% level comes in at 20,800 because the top is 21,800. So it's basically just measuring this entire range, which is basically $2,000, splitting it in half, giving us a halfway point. So some of the resistance levels that I could ascertain would be at 20,500 being the wick lows of this zone, and then the bodies of those candles come in about 20,700, giving us and then also our 50% at 20,800. So obviously there's a bit of a zone here at 20,500 to 20,800. So if it was to come back up there, and anyone trading, that's where I would be looking at some possible resistance. So I don't see too much in it to the upside at this point. And at least the positive to it is that we can keep the stop nice and close, because these levels are pretty close here at 19,700. So the downside, emotions will probably get high if we break through that 19.7. If we don't and we bounce towards it, I'll be looking for some sort of rejection up into the mid 20,000s, with the hope that we break above, form a higher low above that level, and that's the key to then take on that 20,800 again. This level here, that was resistance, and we looked at it over the last several days on the channel. All of this resistance at 20,700, tried to break above, false signal back underneath. Look what happened right here, got rejected at that level, and that's why we know that the market is respecting this particular line at about that 20,400, with those peaks at about 20,007 and 21.8. So they're the levels to the upside that I'll look for in terms of trading. So the critical test for Bitcoin is to hold this level. This is pretty critical now that we've come all the way back down, and it is really trying to hold up. For cryptocurrencies, last chance sort of stuff, reason why I'm saying that is that the market is now reversed and we're getting, again, closer to these lows. And I think there's still a lot further downside for cryptos, for altcoins, than there is for Bitcoin. You know, this is a level that I've been looking for some time now, between the 100-ish, 130, 40, 50 billion, up to about 200-ish billion, just to these tops here. There it is, 200 billion. So from the current price to the top of that support zone, I'm looking at about a 40% fall, generally speaking, on cryptocurrencies. Now, this will have to play out with stablecoins also losing some of their total volume, so some of their market cap as well, because this is made up of altcoins. So that's down to about 200 billion. There's still, what I see over the course of 6 or so months, maybe even longer, more downside for the altcoins, and they're really not bouncing as hard as we are looking for to get them back to that resistance zone of 400 billion, 420, 30 billion, and then back to this zone here at 480 billion. So there's a lot of levels in front of it that can act as resistance. Hopefully we hold up here and then start move towards those levels again. Just looking at that in terms of support and resistance on a shorter term time frame, so down to the 4 hour, we can see that this low, 350 billion, is basically where the market currently sits. Now, I know it sounds like doom and gloom and it's the last chance, and potentially this really is the last chance before it comes back to test some of these major levels. You can see it for your own eyes on the chart that this is a significant level for the market to hold. If we come right back, there it is, 330, and that previous low at about 324. This, in a short term, we're on a 4-hour chart. If this holds up, we're about an hour and a half away from the close of this 4 hour. If it holds within this zone, just looking at a short-term tape reading on this chart, then I would probably like to see, well, I think what would happen next is it will start to see the market try and test the higher levels. Reason being is that close needs to be in this level, because as the old saying goes, the professionals master, or they are the ones that move the close. They're the ones who control the close. The amateurs control the open, the professionals control the close. And this happens on all sorts of time frames, dailies, weeklies, 4-hourlies. And right now, this is the battle. The battle is to get a close within this price range. Obviously, we don't want to see it break down from 553 billion. That's where we need it to stay for it to not come to this last chance in the market, fall out. Let's use Solana as one of the proxies here. We've been down for 1, 2, 3, 4. This is our 5th day down now after Solana was cleanly, very, very cleanly rejected at the 50% level, which was around $42. So that's the 50% of this downrange move. It had the bounce on the 12th of May where the entire market bounced. That's the peak that we're using to that current low where we loaded around 13th, 14th of June. And it's a very easy, clean rejection that you can see here. 5 days down. Waiting to see if this thing can hold up. Of course, these levels again for Solana are about 28 to about 30. So $28.5 to $30.5, which isn't too far from where it currently sits. So the struggle for Solana once we find a bottom is where does it then come back to test? Is it going to be a higher low? This is what the market always does. And then come back down. These are the patterns. Or do we find that low and then come back above and start to move higher? So that I can't predict. No one can predict what's on the right-hand side of the chart. We're basically just trying to plan out some of the scenarios so that we have our plan of attack for what we can do next in terms of trades and where this market might go. For Solana, as the proxy here, the low, from where we currently are to the low price, about 20% from that low point at the moment. And as for ETH, with all of the major mergers coming up and have happened, it really isn't holding up that great. I mean, slightly better than Solana, but really it hasn't moved up anywhere near as much as Solana from the that crash that it had on the 12th. And this is the same 50% range that we're using. This was the bounce. This is the crash low. It's really nowhere near 50%. Didn't even take that out, and it pretty much it didn't even make the previous 50% level. So it is looking quite weak on the bounce as well for Ethereum. Across the board, the main thing that we need to be aware of when it comes to the emotions of the market, probably over the next day to 3 or 4 days, is if the market breaks down from these little swing lows that it put in back around the 22nd of June. If we look to Bitcoin, that was on the 23rd, 22nd of June as well, which is where it currently sits. You can see ETH is just slightly higher. If it breaks down from these 22nd of June lows, we'll probably see some very high emotion coming back into the low, because people will then fear that the market is coming back to take out that current low, because it's still fresh in a lot of people's minds how much this market did crash. And they'll start to fear that we're going even further down from that 880. The fear then comes in that, yes, this is real. The market is going to zero. We're going to some extremely low prices. And that's usually another signal that we're not going to go there, because the emotion is so extreme. Fingers crossed for the test on Bitcoin today. We need to see it hold up at 19,700 cryptos on the last leg here. We'll have to see what happens over the next hour or so. So stay tuned for that. Stick around, subscribe, like the content up, support the channel, enjoy the thumbnails and the titles. It's all for good fun, especially in the bear market. Thanks for your comments. Let me know what you think of the content down below in the comment section. Of course, in the video description, links to Bybit, to $4,400 of sign-up bonuses using the link down there. See you across at the next video. Until then, peace out.